You must work on yourself continuously. Never be satisfied with yourself. Always know that as you invest the effort and time on you, that's the greatest ability that human beings have above animals. See, a dog can't be anything but a dog. Tree can't be anything but a tree. Human being, you've got unlimited potential. You can put effort on you, and by concentrating on you and developing you, you can transform your life wherever you are right now. And as you continue to work on yourself, you will begin to expand your vision of yourself. You begin to work towards self-mastery.
All right, guys. Welcome. This is Pips Over Pass, representing King's Visions Forex. Just wanted to get on here with you guys today and shoot a quick video going over M's and W patterns, or how to actually catch them with precision and preciseness. We'll see if anybody else joined the chat. If not, we'll continue rolling, and I'll give you guys how to catch these M's and W's. Now, I do have here IDJPY pulled up. I'm going to run through this pretty quickly. We will dive into more detail in further sessions. But we see here we do have IDJPY. Did try to cover it up. No longer have the bar replay tool, but we have the formation of the first leg of what looks like a W. Now, the way we're going to confirm this is we're going to be looking for the price action pattern, the W. The M's and W are known price action patterns that actually give you guys great probabilities into your favor. So they're widely used and widely known. If you guys aren't familiar with them, feel free to check some of our content. We do have diagrams explaining, but what we're looking for is the market to be in a uptrend or a downtrend. Then we're going to have a stall or a peak started, and you'll get a form or a level of resistance or support if the market's coming down. You get a move down. We're going to follow to a previous actual area, which is usually a previous resistance zone that was broken that turns into support. And then we actually have a move up. We catch another stall or another bounce in a previous area. And then we get a move down, forming our double bottom. Double bottoms are also well known. But what I'm going to show you guys is how to take advantage of these actual patterns and trade them like a pro. So what we're going to be looking for is we're going to add on volume. If you guys aren't familiar with volume, it's going to be our only leading indicator. Volume is going to give you an indication of when the big boys or when the institution banks, hedge funds enter into the market. It's going to show interest at certain key points or levels. So when you have increasing volume, it's going to signal that that is a true move, that you can ride that trend up. When you have decreasing volume, it's giving you a lookout, or it's letting you know that there's no longer interest at these actual price level or key points. So we see that we have the first leg form of the W. We have our anchor here, or our median. Then we have the second leg forming, and we're anticipating this move up based on that we do have a previous level here. And give me a second, I'll mark that up for you guys. So the market came back down to test the previous level. Bounced off from that level, so there was a good point of resistance. So, bam, we get back down here to the actual level again, and we're looking for a bounce up. Now, if you guys are familiar, when support does become, or when resistance does become support, showing is going to be a strong level. We want to start our technical tools, and we do dive in more detail. If you guys feel free to subscribe to this YouTube channel, give us a like if this content helps you make some pips. We also have a Telegram group and a Patreon video where we offer free one-on-one sessions with the membership, and also a suite of tools, our Pips Over Pass system. And if we look in the past here, though, or we look to the left, we're going to see that this actual area has played strongly for support or resistance in the past, as well as some support. So we're looking for this area to hold. Now, we did get, we got that actual high of the day, and then we got to move down. And then we've got a little bit of a retrace pulling up, or making a higher low. Then we'll start getting a move back down. The way that we're going to know that this area is going to hold is going to use one of our favorite indicators here, volume. So what we're looking for in volume is an increase or a decrease at certain key levels. So we want to use our basic top-down approach. So we'll start at a higher time frame just to give you guys this concept. When we look at a higher time frame, we do see that area has been holding support and resistance. We get down here, we're starting to see the formation. So now we have our areas picked out. We're right about here in the market. Unfortunately, like I said, I don't have my replay tool. We'll make it a lot better right now, but I wanted to shoot this quick video to give you guys some content and hopefully help you guys improve on executing your trades and giving you guys some sharper entries or some more precise entry and exit points. So we do have this actual level here. We're looking. So at this point, we want to see if the market's going to continue or shoot up. As you see, I tried to block it out, but it just gives me an indication that the market did continue up. The way that we did know this is we jumped down to a smaller time frame. We see our double bottom forming here. And what I'm going to do is show you guys the difference between this is naked trading, but we are using volume, if you want to consider volume and indicators. And I'm going to show you guys the difference of a purely naked trader and how much of an advantage that actual volume gives you guys. So we see here, we see it start to come down. We see the wick. What we're looking for is a decrease in volume. We go back here into the past. We're going to see on this uptrend, it is actually confirmed because we have volume increasing. We go to a higher time frame. We're going to be using top-down analysis. We want to see that as the whole time that the move is moving up, we're going to see increasing volume. Once we get to this certain level right here, or this actual peak, we'll notice that the volume is starting to decrease, letting us know that the investors aren't necessarily they aren't necessarily interested in these prices. So as price comes down, we have a decrease in volume. As price is going up, a better area would be from here. So as price is going up, it's going to be preceded by the increase in volume. So it gives us an understanding of what volume does. It's showing us an increase. And if I was to go to a lower time frame, you will be able to see the increase a little better. It sharpens the actual the reference of the increase in volume. So now we're trying to make our decision. We want to know if we're going to go down or we're going to sell or we're going to buy into this market. Well, if we get here, we get down here, we do see a decrease. We have a push up, comes back down for our double bottom. We're still seeing a decrease. At this point here, we have a bull candle, and followed by that bull candle, we're starting to see increasing in volume. Go down to a lower time frame here. Gives us all the indications we need. Decrease in volume on a down move. It's up move as well. So currently here, we're just waiting in the market. We're waiting. Patience pays pips. Still have once we started coming down, we noticed that there's a decrease in the volume. Decrease. Now we're starting to see an increase on these bull candles here. Let us know that the institution or the market makers are interested. Pardon me. It's going to be interested in the up move or taking the price higher. And we have that boom of volume on this candle breaking through. It's going to be our first example of how powerful volume is to confirm the actual trades you're in. If you guys are seeing an increase in volume in your direction, you're going to know that that is going to be considered a true move. Yeah, we stopped right here at that previous level. We don't have an increase in volume. Right now it's about 129, so the markets are kind of settling down from the NYSE open and New York open. So don't see us pushing past this point until later on tonight. I do notice that once and this gives you guys a more detailed shot of what volume does or how to follow volume. We have the increase in volume, also the increase in range, and or the movement of the market. And once we get to this point, this previous zone, we have the market coming back down. But if you notice, there's no volume. So the market's kind of stalling here. It's consolidating, getting ready for its next push, which most likely will be up. Let me verify that. Yeah, I'm looking for that was the first push up, so we're looking for this to continue and to move up higher. So it's going to be AUDJPY. That is also just my quick view of AUDJPY. I'm looking for it to continue to push up based on naked trading, volume alone. I do use a few more indications in my trading, like currency strength analysis, to keep me on the right side of the market. But currently, I'm probably up about 6% here, about 60, 70 pips. I did take this trade earlier based on what I showed you guys with the M's and W's. Caught it down here at the low. Thinking about the wick here. Now, I do have another example real quick. I don't want to make this video too long, but this one's going to give you a more defined analysis of how volume will put you ahead of your competition or anyone else in the market. This one was a daily time frame. It says a nifty. It's going to put you guys anywhere from 50 to 100 pips ahead of what these other guys are looking for. So we do have the formation of the first leg. We do get our double bottom here. Now, most traders or naked traders will just be waiting on, the break of this area or the candlestick formation, and they probably would caught the trade around here. And that's still a nice trade. Probably about 100, 120 pips. We would have been in the market down here. The reason why is because we're using volume. We notice here that once the price came back down to this previous area, we have a decrease in volume. We jump down, we're doing top down approach, we jump down to a smaller time frame to give us more of a bird's eye view or to sharpen our analysis. See the 4 hour here. Come down, got the double top, double bottom, excuse me. And on this example, we need to go in a little further. Bam, there's the perfect example here. Now, what you guys see here, what we call a volume spike, it's going to be the entry point of institution or banks. This is a great example. What you guys want to look for is these spikes in volume. We're going to go more in detail in our volume sessions to give you guys a better understanding of how to use volume analysis and to put you guys ahead of or to trade in line with the actual banks and institutions to put you guys ahead of most retail traders. Now, we look at this actual price action pattern. Let's widen up our charts. We have naked charts, clean charts here. This is about the point here. See, the market did come down, and right here is going to be your signal. You had this big downtrend, and most people, they follow the trend. Indeed, the trend is your friend until it ends. Well, I'm going to say it again. The trend is your friend until it ends. What we're catching is great reversal setups. It's going to give you guys a higher risk to reward, typically about a 3 to 1. So you're going to have tighter stops and more profit potential. So we look here, we see the price starting to stall. When we're coming down, we'll give you guys a better viewpoint. Let's move down. So currently we're waiting. We see this move down here. Volume's decreasing. As soon as we get to this point, now we have our spike. Let's go back here and see our spike. And it printed off an indecision candle. That would have been one indication. The first indication would be the volume. Then you see this actual candlestick formation. We did get a pull back down because these actual, they're just going to be called stopping power. But the market, as we know, it moves similar to like a freight train. So it's going to take a lot of power to actually stop it, and sometimes it'll stop it, but there's still a little bit of inertia or movement in the market. At this point here, what we would have did is for our entry, we would have put their entry above the actual wick, or you can use the body of the signal candle, which will be this candle here. So we would have an entry here, and our stop would have been beneath this actual candle or this actual wick. So we would have never been entered into the market till about right here, and we had no drawdown, all profit, no drawdown at all here. It's big. There's no drawdown simply by using volume. Your stop would have actually been, let's see, 14. We've been looking at about a 35 pip stop right around, and this trade ended up with right about 200. Catch that level again. Excuse me, right around 210 pips. First is only catching 120 by waiting on price action patterns. So you guys got about an extra 100 pips with no drawdown. The thing with the traders that would have waited on the actual break of this area, they would have had a way wider stop. The stop would have been right around here, which would have been right around about 70 pips. This trade is taken off of the daily time frame, so that's the reason why there's so many pips involved. It was 70 pip for just a naked trader compared to enhancing or utilizing volume. You guys would have got away with a 35 pip stop, giving you 210 pips. So, I mean, this is a great way to take advantage of M's and W's. It works on both. I do want to make this video short, so I'm only going to show W's on this one. Feel free to subscribe to this channel for more in-depth walkthroughs. Also, our Patreon will be in the link. You do receive free weekly one-on-ones. Also, our Pips Overpass indicator suite. And show you guys, this is one of my demos. I took this trade for an example here, but got in very early here. As you see, we got in about those levels I was showing you guys, and the market just shot off. Let's take a look at take a quick look here at our system. It's available for Patreon. It's a great signal. It's going to give you guys all the indications you're going to need to take advantage of the market. There also was divergence. This system will have a divergence indicator. It's going to have stochastics. Your volume, of course, RSI built in and harmonic patterns. So if you guys are still learning price action and naked trading, you guys can take advantage of this, and it would have gave you the actual indication to buy the market as well. So that's going to be, sorry, that was AUD JPY. Wasn't the Swiss franc JPY we were looking at with the 200 pips, but currently we're up about 83 pips on this AUD JPY trade we took, the first example I gave you guys. So once again, this is Pips Overpass. Just want to walk you guys through M's and W's and the advantages versus, just naked trading only. So if you guys do have any questions, feel free to link out on to contact me here on YouTube, our our Facebook group, King Visions Forex, the Telegram, our Patreon. Thank you for your time, and you have a great day.